Hello, I'm Bob Decastro in for Hal Eisner. We begin this week with surging inflation, staggering new numbers from the Labor Department. Consumer prices up 8.6% since last May, the largest annual increase since December of 1981. Consumer confidence plunging to a record low as groceries rose 11.9% year to year. Airfare jumped almost 38%. Rent increased 5.5%. And gasoline prices surging 48.7%, now over $5 a gallon nationally. All this sending Wall Street into a tailspin. The S&P 500 entering a bear market this week, down more than 20% from its recent high. To discuss what is to come and what it means for investors, we're joined by certified financial planner David Rae. David, thanks for joining us. Welcome to In Depth.
Thanks for having me back.
So where are we headed here? You know, it's interesting. Everybody feels like we're on this runaway train, right? With no end in sight. Are we headed toward a recession? What's going on here?
I will say nobody actually knows. We can guess. So take everything we're saying with a little bit of a grain of salt. But I will say with unemployment as low as it is, we're not looking at a huge recession here. We are looking at the Fed trying to really get a handle on inflation because we don't want to see prices going up the way you just mentioned there on groceries and gas and travel and all these things that we have to pay for, because those really are budget busters for hardworking Americans. But we do think the Fed is taking steps to get it under control, and hopefully we'll have a soft landing and you really won't feel it much more than you're feeling it right now.
Oh, okay. That's good news. So let's talk about this bear market, because this week they were talking about that we're now in this bear market. So for investors, what does this mean?
Well, I'll be honest, I love bear markets. This is the sixth one since I started investing in 2000. And it really is when you can make a lot of money. By the time we say there's a bear market, the market's obviously dropped at least 20%. So you're really getting some great buying opportunities. And if you're putting money away on a regular basis and saving for retirement or saving to buy a home, and you're buying every month, this really shouldn't affect your long-term investment strategy or your retirement plans or anything like that. It's just a little bit painful in the short term. But on average, a year after the bear market starts, if you invested on the day the bear market started, you'd make over 22% the following year. So there's some potential for some amazing returns going forward here. The big mistake you can make is pulling all your money and freaking out and going to cash, which unfortunately a bear market does cause a lot of people to do. But the people that stay put and keep buying through this are going to do really well going forward.
Buy low, sell high is what they always say. But what if you were at that point where you were hoping to sell high? You're a retiree and you're just around the corner. What should folks be doing if you were on the verge of retirement and now you watched all of your money vanish?
Well, hopefully, 20% isn't eliminating all of your retirement, but I do know there's some people out there that probably had some investments that lost way more than 20%. So you do want to learn from that. You do want to be diversified. You want to be buying over time. And also remember, even if you are retiring tomorrow, you're not taking your entire retirement account out tomorrow. You're going to make that money. Most of us are probably going to be retired for 20, 30, some of us probably even 40 or 50 years. As longevity increases. So that money's still going to be invested for quite some time. And you do have time for that money to come back through this bear market. As I mentioned earlier, even a year after the bear market begins, most of the time on average, you're going to be up substantially back from where you were before the market took a dip, especially, obviously, if you don't sell.
Yeah. All right, let's talk about how this is infecting everyday Americans. Inflation costing American households, we were hearing $460 per month, and according to Market Watch, 40% of people who earn $100,000, a third of them, over $250,000, are living paycheck to paycheck. Incredible numbers. I actually saw that tweet of yours. Those are just staggering statistics there. So what can people do right now? What can people do to budget to make it through this tough time?
Learn a lesson from this. No matter how much you make, you can always spend all of it. So I have people that make $1 million a year that are going broke. You'll hear athletes that are making multi-million dollars and going broke. So here's some ways to deal with inflation for the more average person that's probably maybe making $100,000 or less. Buying more groceries. It may sound counterintuitive to have someone saying spend more on groceries, because I know even with inflation, you're going to be forced to. But if you have food at home, you're probably going to be less likely to eat out. And even the most expensive groceries, even if you're buying, lobster and filet mignon to eat at home, it's still going to be cheaper than dining out in most scenarios. Review your recurring bills. I was also shocked that the average household spends about $275 a month on recurring bills like Netflix and streaming and all these other fun things that we just pay for, video games and things like that. Go through your credit card bill and see what are you paying for that you're not even using. Then you're saving money without having to give up. Also, a lot of the cell phone plans now give you some type of free streaming. I know Sprint and T-Mobile give you Netflix for free. So right there, you're saving $14 a month without having to actually give up your Netflix. So things like that you can save money. If you love it, use it. We're all using it. We're all stuck at home, or we've been stuck at home. Stock up while things are on sale. I know we're having some back-to-school sales probably coming up in the next few months. Look at ways to get some deals there. If you're going to Bed Bath & Beyond, take that 20% off coupon. It's the same item for 20% less. And if you're at the grocery store and something you like and you eat regularly is on sale, buy a bunch of it while it's on sale and just save yourself some money. And lastly, focus on what brings you joy when you're spending. Try not to cut travel if that's your favorite thing to do, even though prices are up substantially right now. Cut back on things that you don't really like to spend money on. I know there's a lot of people who love clothing, and there's a lot of people who don't. If you don't love clothing, don't spend a ton of money on it. Go on a trip, spend your money with something that you do want to do. Eat out with friends if you can afford it, one, and two, if that's really where you want to do. But maybe you have to pick and choose and go out one night a week rather than 2 or 3 to save a bit of money here and there.
Every little bit counts, and a lot of people don't even really look at their budget or their credit cards and figure out where all the money is going, right? And when you write it down on paper and you see it and you're like, wow, unbelievable that I spent this much money on this, this, and this, and before you know it, we're talking about hundreds of dollars. We got about 30 seconds here, David. Just want to know, where we're going here over the next couple of years. A lot of worried people out there in terms of their investments and inflation. Where do you see the future here in terms of our money and the economy?
Things are going to be probably scary for a bit. If a recession, if we do have one, and conquering inflation is going to take some time. But the future is bright. We're the strongest country in the world. We've been through worse than this, I'll tell you that. And we've come back stronger. And every time we've gone into a recession or a bear market, the stock market's marched on to record highs soon after. So stay with your plan. As long as you're employed and your personal finances are doing well, keep plugging along and enjoying life. If you do lose your job, you will have to take some more drastic steps. And there probably will be some layoffs, and there will probably be some people losing jobs, but it should be mild just based on where the job market is now and the economy is looking.
All of those tips that you gave us, no matter where you are in your financial health, will certainly help no matter what. David Rae, always great to see you. Thank you so much.
Thanks for having me.